We have to remember when trading on a higher time frame target basis, not to carry that bias too heavily in order to keep your mind open to opportunities in the marketplace. What do I mean by that? Well, essentially the last 2 trading days for me have been absolutely abysmal. I wouldn't say that completely abysmal, but definitely gone into a little bit of drawdown just because I've been carrying my bias to my higher time frame target too much. And need to remember that when looking on a weekly target and you're working on a weekly time frame, which on this case is this void up here is my ultimate terminus, but I even would take anywhere in this balance. I want to see price reach up into that void, that potential imbalance in that void, but it doesn't mean it's going to happen this week, next week, or the week after. There's still plenty of opportunities for this to bounce around a little bit and then scream higher when it wants to. And carrying that fly higher is going to happen tomorrow, not likely, right? You know, unless you get real good confirmation that's going to happen, you need to remember that. So this is a reminder to myself. Don't carry those higher time frame biases insanely too much. Obviously, this weekly candle is a down candle. So our bias should be kind of down covering that weekly candle. When we get into the dailies, we can start to play around a little bit. That being said, let's take a look at the other things I'm looking at on this weekly candle. That high there that I think we've obviously come into, I think we could dig into it a little bit more. How much more? I'd have to have a look on the daily, but unfortunately we don't reach over that on this contract. I'd really just focus on that. There is this fair value gap that we are bouncing around in. I'm not going to put it on my charts for too much information, but you could put the 175, 50, and 25 pieces of information, each one of those lines in there, so you can kind of get a better perspective. You can see we've dropped down to that 25%. The other piece I would want to actually note would be the high here. I don't think we're going to get to this, and I'm not super concerned with it right now because I'm more worried about this high. But if this thing does close, maybe on Friday, do a little bit of a retracement, and we get a second weekly candle that dips down into that fair value gap, that's when I'm going to be a lot more interested to see the fair value gap on the weekly. I'll use that and transpose it to the lower time frame. So I don't need that right this second. And those are really the main things I'm taking a look at going into this next couple of days. I will put this on the charts, 50% of that wick. That is something that, as Michael says, take profits at the halfway of the 50%. And I'm down to do what the guy says. You know, he seems to be knowing what he's doing so far. Taking a look daily, we don't have any information over there, so there's nothing to garnish. We're just gonna have to live on the right side of the screen. Zooming in, well, you can see our target doesn't look too far away, but clearly it's enough pips. I'm looking for a good 90, you know, I'm looking for over 100 to get to the total target. But the first thing I noticed right here is, yes, we're dipping into this liquidity, and I guess let me change this color here. So this was from the weekly, it's an orange. We're bouncing into this now. I think we could dig deeper, but I would note all of these wicks. And if I actually put 50%ers on them so we can see all of them, this is like high resistance liquidity to me. This is stuff that is kind of, and we'll look at it on the lower time frames to see what that looks like. But that's like, it doesn't even want to get through that. Like, I don't want to get through that. I don't want to trade through that. It just seems like super annoying. But if it is, that's kind of probably why it's doing its slow little trajectory through it. But I think it's going to have a little bit of toughness there. And that's why, you know, I've been probably having a bit of trouble because I'm wanting it to go north and bounce off of some of this. But I am not getting any confirmation that we actually are going north. These daily candles are definitely telling us to go that direction. So we'll have to see here the next day or two if we get that kind of weekly profile, if we're going to get a Thursday, Friday reversal sort of thing. We'll see by tomorrow morning's open. All right, I usually skip that 4 hour again, jump into the 1 hour. And this is where I see what I like to see, or at least I'm more interested to see. And as Michael always notes, I don't even have this thing available. The trend line liquidity, that's going to be disrupted. I mean, who we kidding? Who we kidding there right there? That's like, yum, 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 yum. Liquidity, yum, 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 yum. Is going to yum through all that. So happy when it goes up here. And that's not fact. It's just an opinion. That is my opinion. I would imagine that perfect straight line there is going to be disrupted eventually. But you see, these are all these wicks coming down here. This is all that nonsense that's got to go down through. This was CPI, this big guy here. that's kind of relatively equal low. It's close enough. So there is a potential that we could go down below that. Again, that would have been into that weekly. If we come back up to the weekly, where's this low? I'm going to put this line here and I'll put another orange line. So that's the close of that higher candle. And let's go back into the hour. So yeah, if we were going to close this week out and then have a second week dip down into a fair value gap that would be on the weekly, we could come through that, clean it up, and then take this to eat and go yum, 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 yum. I'm yum, 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 liquidity. Yum, yum, yum. That's all I think of when I was eating liquidity. It's just like, it's like Pac-Man, like, wheat, 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 wheat. Yum, 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 yum. So tasty. It loves a good liquidity, yes. We're on the hour, so I use green for that hourly fair value gap. So you can see we've gone to the bottom of it, and we're again bouncing off of that weekly high over there. So I'm gonna pay attention what happens here in the next day. If we do want to dip down and possibly get this one, I would mark this personally. This is how I do it. I give these puppies green because green means go. Green means go. That could all be liquidity, and then ultimately this could all be liquidity, and I don't even bother putting a single lines off that unless we start going that direction. So this is what I'm talking about with my bias. So the last 2 days, I've been almost expecting this sort of trajectory, and again, remembering that from a weekly perspective, that's not necessarily always what it's going to do. The weekly candles, you need multiple candles, that's multiple weeks, and that's, you just got to stick that in my head. It's like thinking from even the day perspective, looking back at the daily candles, it's like that's 3-day candles, that long time it took to get down there. And even if we were to do 2 or 3 more, getting a giant massive move up here, maybe, but there's a good chance that it'll be the next week. That's what I'm looking on the higher time frames right now. That's that wick I got to look out for. On the 15, yeah, same sort of thing. I'm keeping an eye on these big guys. So I only ever like to fill these puppies in on the 15 minute, and I change him to this blue. And I don't have all this stuff on there. I'm just showing it for journaling purposes, so to speak. This order block at the bottom of it where it dipped back through and then came back up into it, that would have been a perfect trade to get this liquidity, and I'll zoom into that in a little bit. But that, and I'm not really happy with this whole bounce back and forth. I don't like all this shape, but what I will say is I think there's a good chance we're gonna grab this very low liquidity down here. If we go down to, I think even the two minute I was seeing this, I felt better about this fair value gap I used earlier as a trade, a demo trade this morning or this afternoon. I used that as a bounce back up into this top fair value gap, and as you can see, we've passed it, and after we've now passed it, this kind of invalidates this entire section here, although we haven't really gone flying past it. If we were, I would expect something like using standard deviations. I would expect something down here. See the 0.5? This is a nice little, that line there is where that 0.5 on that standard deviation could lead to. So if it was gonna take this liquidity and keep dropping lower, I would imagine that to be a target. But obviously we've gone into the close. But yeah, if I come back up to the 15, it's a little easier to see these dips and liquidity runs are things I pay attention to. And the fact that we went through even this one, you can't really put a fair value gap there, but I would say that that's kind of like the equivalent of one. And then this is like a wick. So I guess you can see it okay on the 5 minute. So if we're looking on the 5 minute here, all these points here, kind of high resistance liquidity in my opinion. If it's coming into this, the 50% mark, if it comes into it with volume and then retraces and then drops down, that's the same, that's a trade I like a lot. So on the higher time frames, that's what could be happening. And it kind of looks like that because at the bottom of this hour, right, we're making an order block. If we pass way down through that, if we come down here, we could dip, we could do a retracement and go for this liquidity, or we could just go straight for that liquidity. I'm not really sure, but that's kind of what I have in mind. Zooming back out to the 15 minutes, a little easier sometimes to see on the higher time frames. So yeah, if we did a drop, dripped down to that, came back into that order block, and then maybe dipped lower, possibly into the next week, that's what we could be going for these lower lines down here, that liquidity over to the left, CPI, etc. So those are the things that I'm looking at for, you know, the rest of the week and into next week until we get some decent signs that we're going to go north. Decent signs we're going north. I want to see somewhere up above this session high. So I'd like to see, let's remove all this and we'll start from scratch so we can see what I'm looking for as a north. At this current juncture, assuming not going lower, I would really like to see us go above that mark, 50% of that one, which is also that point there, right there. So I will give, boom, there's one there. I would like to see it go above that at this juncture. It sounds like it wants to go down lower here over the next day or two. But if we do have a Thursday reversal and crane up, we could get that. So we'll have to see what overnight trades, where we come at the open. You know, if we're looking up here at the open and we're starting to bump into this, then I'd be looking more favorably for that northern bias. Personally, that's just personally. That's not fact, it's just an opinion. I figured I would also point out what I was talking about with this drop below an order block and then retrace and then dip lower, which is a trade I like quite a bit. Obviously you have to work off higher time frames, so I figured I'd share one that could have happened today. I didn't take it, I got a little too caught up with the northern bias, but this is what it looks like on a lower time frame if you're curious. So looking at this, so we're on the 15, and generally I start on the 15. Again, Michael uses that as bellwether. I find it's very easy visually to sort of see what's going on larger time frames, and it's a good place to start your bets. So we've got the 50% of this fair value gap here, which you can see if I hover over these two little lines. That's that, and I'll actually put a white line here for everybody, so it's roughly there. We're kind of doing this haphazard. This bottom, boom, that there. Once I get a close below midway, you start to be a little anxious that maybe she is going to go through that whole fair value gap. And so we did get one here. Unfortunately, I didn't see that, and I should have seen that. And so this little wick right here, I think I need a white mouse. Hold on, I need a white mouse. How have I got not a white mouse? All right, well, I'm gonna do that another day. This little wick right here, I should have seen it with the bodies. The bodies of those candles right there, they really told the story that it was, hey, look, we're probably going below it. But then when we got this candle over here, this should have been real pay attention to, hey, we're closing and we've gone through with volume on 50% of that 15-minute. It's not a fair value gap, but it's the equivalent of that balanced price range on those two. And that's sort of what, I think Michael looks at this sort of stuff too. I think these things, I always pay attention to these big dips. Those are the big boys to watch out for. When they're the ones that tell you where it's going to go. And so if we zoom on down, let's go down to 2 minutes. So we're still looking here. This is this little wick. This was this little wick over here. And this was just before 9:30. We got this little thing, and this should have been some sort of confirmation that we were going lower, or at least confluence. Sorry, not confirmation, confluence. Because if we were just going to wick below this, which happens quite a lot, and let me also preface that it can fill in this for fair value gap. So it can come down to here and then retrace. So it could have come here and retraced. And that's what this order block is that's being created over here. So if we zoom on in, you can see that that's clearly an order block being created right here. This creation is an inversion order block, if you will. Now I know Michael doesn't have that, but this is what I consider an inversion fair value order block, where it's one that I like to trade if it's leaving a fair value gap on a higher time frame that it's going south on. Oh, it's a buggy. Yeah. If it's going south on a higher time frame, this is where this is going to tell me the story, and that's where I would take that trade. So dropping down to 2 minutes, this is roughly that same point. So we're at the bottom, this blue line here, and there's all this blue background is that fair value gap. So we're coming up to the bottom of it. This whole area here, this is the order block. The order block is the creation that I'm expecting. If we're gonna wanna go north, from here is where we're gonna wanna be a launching pad. This here is something that I was paying attention. So this little sweep dip below and this swing down is the fair value gap into, as Michael would call it a breaker, right? So you've got this one here. If you're on this time frame and you're considering these order blocks, then they get swept and then they come through with a fair value gap. That right there is the trade. As soon as it comes into this point, and this would be the point right here, right at that point there. So once we go south, we're gonna travel down here, we're gonna dip, it keeps going, but it hasn't gotten our actual target of liquidity. And then we're gonna come back up. And as we come back up, that's the sell. Your stop, if you wanna be safe, you can put it up here. If you wanna be a little more risky, you can put it just like probably at the top of this, I think. I'm not 100% on the stop on where I like this, because sometimes depending on how much swing it's got, I'll put it at the top of this. But I have found that you will be okay even if as long as that whole order block is inside the fair value gap. If we're talking like this whole order block here is inside this fair value gap, then you're probably wrong if it goes past that. So that's kind of where your stop could be, but just to be safe, you know, let's be realistic and be a little more cautious. And then, boom. All right, zooming back out to the 15-minute, that's our liquidity on the lower time frame. I'm gonna do green. So if we take this, here's my that was my entry, and then we drag this down to the green line, that would have been a target. Now, would that have been full target? Should you have taken partials before then? I probably would have let that be the 75% target. I would have 75% there, and I would have held on a couple and looking for something larger. There would have been a partial here at the close of the fair value gap. So there would have been probably 50% of whatever I had left over. So 1 micro, 2 micros, depending if I had done full 10. And then I probably would have held the last piece for here, that 50% of that wick, but we didn't get down there, so I would have got stopped out on the very last one. That's if I had been in the trade, and I wasn't in the trade. So I'm not saying I was, but that is a trade that I do like. Just to put it in perspective one more time, those green lines are the targets. Like I said, 75% would have been this first point here. This would have been 50% of whatever I had left over or more. And then I would have 1 or 2 left to swing down for this, but ultimately I probably would have been stopped out. That said, I would have pulled my stop down to here. And if we kept dipping lower, I'm not really sure. I might have brought my stop down to here onto this swing point. That would have, because you can kind of see that that's another one of those trades. Order block creation, swings past it, comes back into the order block right there. So that might have been a point of stopping. But yeah, I would have been stopped out on that last one probably if I was holding on too much longer, clearly. So yeah, that's what one of my favorite trades looks like. So what do we do taking in all that information into the rest of today, the week? Remember the bias. That's the main thing I'm taking away for myself. Remember that you're on the higher time frames. Those candles take longer to form, so you have to be remembering that when you're carrying that bias into it. I'm so used to the intraday scalping that sometimes that gets a little bit foggy there. So remember that. Keep yourself sharp between the ears and try to listen to what the market tells you. So as it stands right now, it's a good chance a little bit lower to clean up a little bit more of those wicks down there, but it is high resistance, so gotta be careful. Also remembering Chair Powell, do not let him get you tripped up. So I'll look in the morning, hopefully not get caught up on anything dumb, who knows. But the afternoon session will probably be where the good stuff is. So, all right, awesome. Good luck, good trading, yeah.